The Monetary Board of the Central Bank has decided to increase its standing deposit facility rate and standing lending facility rate by 50 basis points each. This brings the STFR to 5.5% and the SLFR to 6.5%. In addition, the board also announced a decision to share the financing of essential import bills for fuel purchases among licensed commercial banks in proportion to their foreign exchange inflows as well. Further, in a move to increase foreign exchange receipts, the central bank has also mandated all registered tourist establishments to only accept foreign currency payments for services rendered to non-residents of Sri Lanka. Meanwhile, explaining the central bank's rationale behind the policy rate increase, Director Economic Research Dr. Anil Pereira says that the move comes on the back of increased signs of economic recovery.
We observe as the central bank, economic activity is recording a gradual recovery. So some broad indicators suggest, for example, the purchasing managers index, the central bank, and some mobility indicators and some sentiment indices like LMD Nielsen index suggest that the economy is actually recovering. With this recovery in the economy, we expect that the economy would grow around 4% in 2021, and also continuing the growth momentum, we anticipate that the Sri Lankan economy will expand by a minimum of 5% in 2022.
In the meantime, Central Bank Governor Ajit Nivard Cabral responded to questions regarding the role of private banks in financing essential imports.
If you see one item for our policy measures, we have reached an agreement with the licensed commercial banks that they too would be bearing the financing and the arrangement of the financing of certain essential goods, so that essential goods are not only put as a burden to the state banks, so it will be in proportionate to the dollar earnings as well as the dollar incomes that they receive. We would be negotiating with them, and they will be taking a part of those bills as well, so that there will be a greater stability in the overall external sector. It is necessary for us to ensure that the essential items are first imported, because last year we saw that $21.5 billion worth of items were imported. So that is a comfortable number to have accommodated the essentials. Before the essentials were met, non-essentials were also being imported. We don't want to see a situation where we have to struggle for essentials, but all the non-essentials are there. I don't think anyone of you would like to see that happening. First of all, we got to ensure that the essentials are also provided for.
With that, the central bank governor also responded to questions on the bank's decision to avoid defaulting on its $500 billion international sovereign bond repayment, explaining that the amount repaid was just a small percentage of Sri Lanka's $21 billion imports bill last year.
We have rolled out an IMF program because I think these programs that we have initiated would work. Even if the IMF comes, what is the different program that they would be able to prescribe other than to say restructure your debt? Why is it that you are keen to inflict pain on your investors who have trusted you and come? Do you know what would have been the situation had we defaulted, like what some people had proposed? Yesterday, we had a treasury bill auction at which 97 billion rupees was on auction, and it was fully subscribed. If the day before we had defaulted, like as advised by some of these people, what would have been the state of that auction? What would have been the state of the ships that were coming? So you see, we have to understand, people can offer advice. They will say $500 million you must keep. $500 million out of a 21 billion of imports. What is the percentage? So would you rather sacrifice your entire economy than hold back 500 billion? So that's why those have been considered carefully and then the decisions taken.
Governor Cabral also rejected calls for an IMF facility, explaining that it could be termed unnecessary as measures outlined by the central bank were coming to fruition.
Most of the items that we have been talking about have been materializing. We talked about swaps, those are coming. We spoke about various country-to-country facilities. You have seen those announcements being made. That is why I think we are also conscious that there is a program that is being implemented, and we don't need to have 2-3 different types of programs coming and then confusion being caused.